The Moore Corporation has operating income, that's EBIT, earnings before interest and taxes, of $750,000. The company's depreciation expense is $200,000. Moore is 100% equity financed, and it faces a 40% tax rate. What's the company's net income, and what's its net cash flow? Present your answer in a professional manner as if you were presenting it to your boss for consideration. All right. There's the solution. You start off with EBIT, that's $750,000. Then you could back off less interest expense. 100% equity finance means there's no interest expense. So EBT, earnings before taxes, or pre-tax income, would be $750,000. They're in a 40% tax rate, so take 40% of the $750,000 and subtract that. Comes out to be $300,000. So now we're down to net income of $450,000. Then we have to add back any items in the calculation of net income that didn't impact cash flow. And in this case, it's depreciation expense. Remember that depreciation expense is essentially a bookkeeping entry, right? What the accountants do here is they record depreciation by increasing depreciation expense and increasing accumulated depreciation. None of those impact the cash account, so there's no impact. Therefore, the net cash flow is $650,000. Okay, now let's change it a little bit. Next, let's assume that instead the company has $5 million of assets and was 50% debt financed at an average cost or rate of 11%. So how would this change the calculation of net income and net cash flow? All right, so the earnings are still $750,000, but now we've got interest expense. That's $5 million times 50% times 11%. That comes up to $275,000 when we do the calculation. That nets us, or gets us, earnings before taxes, that's EBT, or pre-tax income, of $475,000. Then we subtract out our 40% of the EBT number, the earnings before taxes or pre-tax income. 40% times that number is $190,000. That gets us net income, one of our answers. And then again, we have to add back the non-cash depreciation. That's the same $200,000. And so in this instance, we've got net cash of $485,000.